Okay, so as Mike mentioned, we're going to start with the basics. You have to walk before you can run, right? So we'll take a look at the Social Security statement. I'll try to orient you to the things that I talk about where you'll find that on the statement. And then we'll cover some of the key terms that you need to know when you're thinking about your benefits and when you're going to file, as well as the strategies that you may consider. And then we'll go through some of the most basic type of benefits, the benefits that are going to apply to most of the people in this room in your lifetime. Okay, so hopefully you have seen your Social Security statement before. So let's start with something that you're familiar with. This is the first page. If you've ever read this before, I'd be surprised, but it gives you a sort of State of the Union address on the status of Social Security, which Mike has already talked about. So it includes information such as your estimated benefits, your earnings record, taxes paid into the system, as well as contact information for contacting Social Security. So let's take a deeper look in the statement. Up here we have a bit of an eye test. Don't worry, you don't have to read this. There are 5 core sections of the statement, and I just wanted to point them out. So in the upper left-hand corner, you have your estimated benefits. There are several types of benefits that Social Security provides, and here you'll find the amounts that are estimated for you. Below that, there's more information about how the estimates are made, as well as factors that may end up reducing your benefits, so you want to pay a little bit of attention to that. On page 3, in the upper portion, you have your earnings records. So throughout your career, you've made money. This is where it is. You can look back and say, oh gosh, I only made this when I started, and look at me now. Isn't that awesome? Next, you have the taxes paid. So this shows you how much money you've pumped into the system over the course of your career. And lastly, at the bottom, more contact info for the Social Security. Okay, so now let's zoom in on the estimated benefits section. Broadly speaking, there are 4 categories of benefits. You have your retirement benefit, your disability benefits, family benefits, and survivor benefits. For the sake of time and your sanity, we're only going to cover 3 common benefits. I would take a look at this and get familiar with the other type of benefits that are out there. You should be aware that there are additional benefits available through the system for your spouse or your dependents should you become disabled or die. That's uplifting, isn't it? Oh, okay. So moving on, the 3 common benefits that we have. There is the retirement benefit, the spousal benefit, and the survivor benefit. We're going to start looking at the retirement benefit because the spousal benefits and the survivor benefits are derived from your retirement benefit. So how does a person qualify for a retirement benefit for Social Security? First, they have to have 40 credits. And I'll explain what a credit is in a minute. After that, you have to reach the magical age of 62. And then last, this isn't so much a qualification, but important to know, Social Security is not going to come knocking on your door when it's time to file for benefits. You have to be proactive and contact them yourself. So what is a credit? Simply put, credits are earned by working and making money. Okay, you don't have to make much money to earn a credit. As you can see here, 1 credit is equivalent to $1,220 of earnings. There's a limit on how many credits you can earn in a year, and that is 4. So as you can see, throughout the course of a year, all you have to do is earn $4,880 to max out your credits for the year. These earnings can be earned at any time in the year. So for some of you in the room, you probably make that at least in a month. Okay, so then next, you have 40 credits. That amounts to about 10 years of working history. For those of you that plan on working more than 10 years in your life, you'll say, well, I'll have more credits. Will I get more benefits as a result of that? And the answer, unfortunately, is no. Sorry. To find out how many credits you have and if you qualify for your retirement benefit, you can look at the estimated benefits section under the retirement benefit, and there'll be a sentence there that states whether or not you have enough earned credits. If you don't, it'll say how many you do have, and now that you know that you just need 40 credits, it's just simple math to figure out how many more you need after that. Okay, so to earn credits, you have to have earnings, but not all earnings qualify to earn you credits. The earnings that you need to have to pay into the Social Security system, so they'll have to be subject to FICA taxes. FICA taxes are what are paid into Social Security and Medicare. Types of earnings that will qualify for credits would be your wages, your salary, any bonuses you receive, or commissions or self-employment income. What it's not going to include is income from your investment portfolio like interest, dividends, or capital gains. So let's take a look at the earnings record of your Social Security statement. Again, you have year by year the earnings that you've accrued to yourself throughout your career. You might ask yourself, why are there two columns? The first column you see is for Social Security earnings, and the second column is for Medicare earnings. It's interesting to note that the earnings that you make during your lifetime are subject to Medicare taxes and Social Security taxes. However, for Social Security, there's a limit on the amount of earnings that they'll tax. So for 2015, that limit is $118,500. If you earned more than that throughout the course of 2015, that additional excess amount would not be taxed to fund the Social Security system. That's not the case when it comes to Medicare. Every dollar of earning is taxed and paid into Medicare. So you'll find that the Medicare earnings column will either be equivalent to the Social Security's column or greater. So on this slide, you can see there's some zeros in the Social Security earnings column. Why would that be? It may be because you weren't working, or in this case, the person worked for the government, or they could be a teacher. It's employment that doesn't pay into Social Security. It's a good idea to review this page because your earnings are what result in your benefit amount. Okay, so now that we understand what earnings and credits are and how you become qualified for retirement benefit, let's review some of the key terms that you'll need to know when thinking about strategies and thinking about the different types of benefits. The first is your full retirement age. I have a chart up here. Take a moment. You'll see that it's oriented by year, and then there's the full retirement age. So depending on when you were born, you'll have a different retirement age. As you can see, the younger you are, the higher your full retirement age is. So as Mike mentioned, this is one of the areas that they could tinker with and adjust. They could say, Jake, you're a good-looking young guy, but sorry, your full retirement age now is going to be 69 or 70 because you were born after 1970. So if we go back to the statement, say you forget what your retirement age is or you need to find that out again, you can refer to your statement and you'll see that reported in the estimated benefits section. The next key term you need to understand is the primary insurance amount. The primary insurance amount is equivalent to your full retirement benefit at your full retirement age. This figure is going to be the focal point for determining your retirement benefit, as well as any spousal or survivor benefits based on your record. You probably wouldn't be surprised to hear that the calculation that Social Security does is very complicated and convoluted. So I'll just summarize it quickly for you. It's based on the 35 highest years that you have in terms of earnings. There's other additional math that goes into it, and I won't get into that. The last piece is that your historical earnings are adjusted for inflation, and that's important because they want the benefit to be meaningful in terms of today's dollars. We all know a dollar 35 years ago doesn't go as far today as it did then. Again, you can refer to your statement and find your primary insurance amount. This will be equivalent to your retirement benefit at your full retirement age. You'll also notice that there are additional benefit amounts reported for different ages, and it's important to realize that the assumption there is that you will work up until that age. Okay, so the last thing I'll leave you with in terms of the retirement benefit, the most important thing to understand is when you go to collect at your full retirement age, you'll get 100% of your retirement benefit. But if you claim early, you're going to get something less. And if you wait, you're going to get something more. And that has implications for not just your retirement benefit, but for spousal and retirement benefits. They're going to help illustrate and walk us through the spousal and retirement benefit or survivor benefits. We'll assume for in this case that Ricky has qualified for a retirement benefit, however, Lucy has not. So is she out of luck? Can she not receive any Social Security benefits? The answer is no, she actually can. She can claim a spousal benefit. So the requirements for a spousal benefit are you must be at least age 62 and married to your spouse for a year. It's also important to realize that the spouse that you're claiming your spousal benefit on has to also have filed for benefits. So in this case, Lucy could claim a spousal benefit on Ricky's benefit if he had reached age 62 and filed. Okay, what if the comedy of Ricky and Lucy turned into a drama and they got divorced? Would Lucy lose her benefit? Would she not be entitled to a spousal benefit? No, she would still be able to get a spousal benefit. So the requirements for an ex-spouse to claim a spousal benefit are both spouses or ex-spouses must be at least 62. They had to have been married for 10 years. And the ex-spouse has to be single. The other point to realize is that if the divorce was recent, that the ex-spouse has to have filed for benefits. So in this case, if Ricky and Lucy got divorced less than 2 years ago, Ricky has to have filed for his benefit in order for Lucy to get hers. But if the divorce happened more than 2 years ago, Lucy could claim the spousal benefit and not worry about whether or not Ricky had filed. The other important thing to know about spousal benefits is if the spouse claims a spousal benefit, it does not impact, in this case, Ricky's retirement benefit amount at all. So how much can the spouse get? At most, they'll get 50% of the primary insurance amount of their spouse at their full retirement age. So said another way, Lucy will receive 50% of Ricky's primary insurance amount at Lucy's full retirement age. If Lucy claimed earlier, she would get something less than that. And we'll cover that in more detail a little bit later. Okay, time has gone by, and now Lucy is on her own. Ricky has passed away. Is Lucy stuck with the 50% spousal benefit? The answer is no, she could claim a survivor benefit. In order to claim a survivor benefit, you must be at least age 60. There's an exception for those that are disabled. They could claim the survivor benefit as early as 50. You have to have been married to your spouse for at least 9 months. And if you remarry, you'll want to do that after 60. Otherwise, you'll lose your survivor benefits. And you can also claim a survivor benefit on your ex-spouse. Okay, so how much would a survivor expect to get? Well, the answer there is a bit complicated. There's a lot of moving parts to that piece, but generally speaking, the survivor will be entitled to 100% of the amount that the deceased spouse was either receiving or was eligible to receive at the time of their death. So in this case, if Ricky passed away, Lucy would receive anything that he was getting. The important point to recognize here is that you can't claim two benefits at the same time. So there's a trade-off. Lucy keeps the spousal or she takes the survivor. It's one or the other. Okay, so that's the basics. Now we'll get really complicated. And for that, I'll turn it over to Tracy.